Hi everybody, welcome to another update on the stock screener. I promised to talk a bit about Monument Mining when the financials come out, and we got the financials. Look at the chart, it's a real beauty. It's up double in a year, and I think it continues to double. So I did talk a bit about Monument Mining here. So let's see what I posted. We got some earnings. As you can see, the grade is down a bit. I expect this to come back up. Normal grades are around 1.7, so this could have an impact on the costs, which are up a bit. Yeah, but this should come down when the grades normalize again. Also, recovery 71% should go higher. 80% is what I think it should be at. Production is stable, considering the grade and the recovery. Also look at the gold price, 1,900. We are currently at 2,070. So that's more than $100 higher. So this company is going to make a lot of money with these costs. So I am pleased. EV to free cash flow around 3.5. So that's good. The trend is up. Net earnings, you can see that they are in the positive and probably going higher. They did post a net loss, but that's due to foreign exchange. But these are the real numbers. Okay, the overall metrics, let's take a look. So the grade went down. Take that into account. This should normalize back up, yeah, to 1.7, maybe even 2. We did almost go to 2 here. So yeah, when they go deeper into the open pits, I think the grade will go much higher than 1.5. So good things are going to come in the future. Also, the recovery is improving. We are above 70. Let's hope they can get to 80%, 85% maybe. So they need to improve the process. The filter cloth needs to not break down. So a lot of improvements are being made right now. Ore processed is at capacity. Capacity is around 80,000, so they cannot go higher than 80,000. So they need to try to get this at full capacity and keep it there. Production follows, of course, the amounts of ore processed. Important, the ore processed is this here, but they did mine more than the ore that's processed, so that the yellow bar is higher than this bar, so they do have a stockpile. Take that into account. That means the costs are up, but normally if the amount of ore mined and processed is the same, then costs should be lower, right? Okay, all-in sustaining costs up a bit. It was 957, now it's 1,150 or something like that. This should come back down, right? If the grades improve and ore processed is a bit lower. Production is in an uptrend. Yeah, it was down a bit due to the grades, but the trend is up. Cash costs down. That's a nice trend. Gold production up. And the cash costs are pretty stable. So margins up. I mean, it's a very good report. This is the current NPV model, taking into account that BIOX is going to be built. And the upside is plenty, 4x, not 40x. But I do see this doubling and tripling. It's really easy to see that. And gold is going to go higher, 2,500 maybe. Let's see where that goes. So the upside will be even more. This fee has been paid, apparently. So they also got an extra fee for Murchison, 660,000 US dollars. So in the next report, we will see a boost in the earnings from that. So all looking very well. Concentrate payability was 80%, so they do get good money for their concentrate. Open pit, I got this nice figure here. You can see the ore body and higher grade at depth. So we are currently at 1.5. That will probably improve in the future, in the coming years. And here is another pit that they are mining. So it looks like a good ore body. And if you can do math, you will know that this will double if gold goes to 2,500. So currently at 35 million could go to 80 million. So that's a triple in market cap. So I'm not going to sell. I'm going to keep holding, maybe buying more at some point, because this is a very good company. And you can also easily see that from the balance sheet. So this was September. When you just look at the current assets and total liabilities, you can just subtract this and this. So that's around 23 minus 21, that's $2 million. $2 million in the plus. Okay. I don't count the non-current assets. So 2 million in the plus, and now in December we have 26 minus 21. So that's around 5 million. 26 minus 21, that's 5 million. So from 2 to 5 million, we got an extra 2.5 to 3 million US dollars in cash position. So that's an improvement. Almost 3 million per quarter times 4 is 12 million. So 12 million per year with a market cap of 35. Do the math. That's a PE of 3. Very cheap. And this is only with 70% recovery, with higher mining rates, with lower processing, and with lower grades, 1.5 grams per ton grades. So even with these bad numbers, well, it's not that bad, but they can do much better. You have a PE of 3. Okay, a PE of 3 with these numbers. Now, I think they can go to here. This is the guidance that I have. So we are currently at 6,800 quarterly production. I think they can go to 10,000 quarterly production. So still a lot of upside possible. Why? Because production will go up due to higher recovery. I think they can go to 80%. The grade can also go back up to 1.8 grams per ton, right? That will increase the production, and we will see much better earnings later on, PE of 2. So this is a very cheap company with a good mine life. Ore body is still there. And we have not even counted in Murchison, which is already worth 20 million, I think. So add this and you have a P of 1. Super cheap, plenty of upside. So that was the upside. I mean the update on Monument Mining. And this will continue going higher. I'll see you in the next video. Bye.